Ladies and gentlemen, good day and welcome to Tube Investments Q3 FY23 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anupam Gupta from IIFL Securities. Thank you, and over to you, Mr. Gupta.
Thanks, Nirav, and welcome everyone to Tube Investments 3Q FY23 conference call. From the management, we have Mr. Vellayan Subbiah, Executive Vice Chairman, Mr. Arun Murugappan, Executive Chairman at TI, Mr. Mukesh Ahuja, Managing Director, Mr. A.R. Meyyappan, Chief Financial Officer, Mr. K.K. Paul, Managing Director at TIC MPL, and a couple of other team members as well. I'll hand over to Mr. Vellayan for the opening remarks, post which we can have the Q&A. Over to you, sir.
Thanks, Anupam, and good morning, everybody. I'll just go with a quick opening remarks and then turn it over to you for questions. The board of TI met and approved the financial results for the quarter ended 31st December 2022. The board met on Friday. The board has declared an interim dividend of rupees 2 per share for the financial year 2022-23. The standalone results for the quarter, the revenue in Q3 was at 1,710 crores compared with 1,701 crores same period previous year. The PBT was at 192 crores as against 161 crores in the same period previous year. And the ROIC was at 52% compared to 50% in the same period previous year. Free cash flow for the quarter was 115 crores. The engineering business revenue for the quarter was at 1,081 compared with 996. And the PBIT was at 134 as against 87. Encouraged by the strong demand, the company has planned to expand its capacity in the large diameter precision tubes manufacturing facility at Tirupati at a cost of about 140 crores. For metal form, our revenue was at 371 as against 330 for the corresponding quarter, and PBIT was at 42 versus 32. Mobility revenue was 174 compared with 280. And PBIT was 2 crores as against 15 crores. So the cycles business continues to be sluggish for us. The others revenue was 166 versus 160, and PBIT was 12 versus 11. At a consol level, that obviously includes CG Power and Shanti Gears. Revenue was at 3,666 crores as against 3,410. And the profit before share of profit of an associate joint venture exceptional items and tax for the quarter was at 416 crores as against 354 in the corresponding quarter of the previous year. CG Power, in which we have a 58% stake, registered a consolidated revenue of 1,775 as against 1,551, and PBT there was 282 versus 174. And Shanti Gears, in which we have 70% stake, had a revenue of 115 as against 95 and a profit of 23 as against 17. Commenting on the results, Mr. M.A.M. Arunachalam, Chairman TII, said engineering and metal form product businesses continued their excellent performance in the third quarter as well. The bicycle industry continues to suffer from contraction in demand, and our bicycle business manages costs and operations well to remain profitable. Overall, the company has delivered excellent performance in both top line and profits. Our subsidiaries, CG Power and Shanti, have all registered consistent performance and delivered strong results. So that's a quick summary on results. And let me stop and turn it over to you for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. My first question pertains to the engineering business. We have seen a QoQ decline in revenues for engineering business. So is this reflection of the tooler industry performance, or are we seeing any further pressures beyond tooler segment as well?
You're talking about quarter-on-quarter, is it?
Quarter-on-quarter, yeah, vis-a-vis previous quarter.
Okay. So usually, obviously, Mukesh, why don't you go?
Yeah. You are right. Particularly, maybe you see there is a seasonality in the demand. December month, generally, model change and all these things will be slowing down the production. And two-wheeler contract, let's say, flat demand as a result into this. But however, it has been recovered by the PV as well as commercial vehicle strong demand. So little bit slowdown is on account of two-wheeler industry. You're right.
Okay. And exports continue to do well. Can you share how big is exports now for engineering business?
Yeah, exports continue to do well, but as we are aware, Europe is going through some little bit slowdown along with the US, particularly because of the pile of inventory due to energy crisis there. Otherwise, maybe there is a good progress on account of OEMs getting awarded new businesses and the new programs getting launched. On that side, there is a good performance.
Okay. Got it. And on the engineering business again, I mean, the margin contraction on QoQ basis, that would be on account of operating deleverage only, or there is something else there as well?
Like we shared in the last quarter, there was a customer prices settlement happens generally in quarter. Sometimes it happens due to delay. So there was a one-time item. Otherwise, there is a consistent maintaining of the margins. There is no issue.
In 2Q, we had one-time item on price settlement. Okay. And can you quantify how big that was? Or adjusted for that, what were the margins in 2Q?
Generally, we don't quantify that, but it is on account of that one.
Got it. And second question on the cycle business. So there we are continuing to see pressures on volumes. So can you indicate what kind of decline we saw in the cycle business and where are we in terms of the export ramp-up in cycle business?
Yes, cycle is going through a little tough time because after COVID, there was a really escalation in demand. And post-COVID getting streamlined, the bicycle business is getting into a little bit stress. And there is a huge contraction in demand. So we are trying to optimize internal cost and work on logistics and all those stuff so that we can pass through this.
So for the industry, what would be decline? And for us, are we in line with the industry in terms of decline, or
we are maintaining market shares as of now.
Okay. And lastly,
we are focused on the cash flow in this business along with the capacity rationalization. Those steps we are taking.
Got it. And broadly at the mobility business level, can you indicate what would have been the losses on the electric three-wheeler business? Because the margins again here have corrected quite materially. I'm presuming that would be partly because of or largely because of increased activity for the electric three-wheeler launch.
So Meyapan, Meyapan, do we have the data? Can you share?
Yeah. See, consolidated, sir, the difference in the mobility, 37 crore is there. There is a loss which we have shown. Then 39 crore is the mobility on account of e-mobility.
Got it. Thanks. I'll come back in queue.
Yeah.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Abhishek Ghosh from DSP. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Sir, just one question in terms of the slight softness in the top line is also on account of some amount of pass-through of the lower commodity prices. Is there also an effect of that?
Yes, that's right.
Okay, and that would be to the tune of 5 to 7%. Would that be a fair estimate?
Generally, we don't quantify, but you can assume it is around those numbers.
Okay, okay. Thank you.
Yeah, no, but what you can do is so Mukesh, so basically, it's about right.
Okay, so where we're coming from, the volume growth is fairly healthy. The moderation is largely because of the commodity pass-through. That's the way to look forward.
Yeah, exactly. Yeah.
Yeah. So the other thing is, in the last con call, we were kind of talking about some amount of inventory pile up at the, global levels, and that's why there was a little bit of destocking which was happening. So how is the situation now? Obviously, you have an advantage of catering to many countries, but just from the broad level of exports, which was about 20%, how should one look at the outlook on that?
I will. Yeah, please. Go ahead.
Yeah, sorry. This is Murali, head of implementation. The stocks are getting slowly liquidated, and we are seeing the signs of recovery from the month of January onwards. So we see that in the coming quarters, the volume requirement of most of the exports customers, mainly in North America and Europe, will get revived.
Okay, that's helpful. So just one other thing, railways, if you broadly look at it, which is a part of the metal form, there's been a lot of upbeat in terms of the overall outlook, and that's a segment which through the crisis didn't do well. Any thoughts in terms of how should one expect the contribution from there in terms of growth rates and other things, and given the overall, outlook on the order book there?
KRS, you will take this. KRS, you are there?
Maybe you answer.
Yeah, I will take it. As of now, the government of India has started rewarding the new contracts, which are the pipelines, and contracts are getting confirmed. But scheduling, there is a bit of delay. We are optimistic about these sectors going forward. But as of now, in Q3, there was not much of progress. But the new contracts, the good news is new contracts have started getting released, and we have participated in that, and we are hopeful coming quarters will be better in the railways.
So railway has still not started contributing to the volume growth. It will only come in the coming quarter. That's a fair assumption.
That's right.
Okay. And so just one last question. In terms of the new CAPEX that you have announced, of that 140-150 crores of CAPEX, what should one assume that peak revenues that you can do from that plant?
As of now, we are running in the capacity is utilization is getting close to 100%. So we generally take a proactive step in doing the capacity expansion in terms of the foreseen growth in that sector. And as you are aware of that, infrastructure spent by the government of India is multiplying, and we expect the construction industry to do pretty well going forward, and which is going to result in the more volume for large diameter plant. And that's why we decided proactively to expand the capacity, and which will help us not only on the capacity, even on the capability front also to contribute for the coming time.
So my question was more around, can you do a peak revenues, something like 400 crores out of this plant whenever it gets fully operational?
We can assume that.
Okay, sir. Thank you so much. I'll come back in the queue. All the best.
Thank you. Participants, you may press star and one to ask a question. Next question is from the line of Nishant Jalan from Axis Capital. Please go ahead.
Yeah, hi sir, this is Nishant from Axis Capital. My question was primarily on two fronts. One, on the EVs side, just wanted to understand, we had launched our three-wheelers, so any initial feedback. And last call we mentioned that we will launch our electric tipper in December. Has that launch happened, or what is the new timeline? So if any update you can give us on the EV business, that would be great. And second question is, what are our net debt levels now in both standalone and consolidated entity? Just wanted to understand because we have done some acquisitions and making seed investments for EV business. So wanted to understand how is the balance sheet looking like.
Sure. So first on EV, so the EV three-wheeler, we did have the marketing launch for it. We will start manufacturing and put out the first set of products in March is our current plan, and then start selling increasing volumes from April onwards. On the EV tractor also it will follow, the EV truck, the 55-ton truck will follow a similar timeline. The EV tractor is something that will still need full homologation. So that timeline, we're estimating that we'll get homologated in that March-April timeframe, which means that sales will only happen in the July timeframe. The EV tractor timeline is a delay from what we had anticipated in the past, right? So that is in terms of when we assume the revenue on these three products will start. The question on net debt at a standalone and a console level, is it 170 crores of net debt, Meyyappan, or I?
Yes, sir. 170 standalone, correct.
170 standalone, and obviously, like you know, CG Power has 600 in net cash.
Okay.
So at a console level, we're still positive, but CG and Shanti are both cash positive, and to the extent of about, I would estimate between the two, about 650 crores. And though Meyyappan, you can have, if you have the exact numbers, Meyyappan, you can give us, but standalone net debt for TI is 170.
Yeah, 170.
Got it. Just one follow-up. I was not very clear on exports, commentary on exports. You did mention that, I think the last quarter you had mentioned that exports are weak because the markets are not in a good shape right now. So how did it pan out for us in the third quarter? And I just understood that you mentioned that the outlook is getting better now from January onwards. Did I hear it correctly?
Correct.
And any numbers you can share for the 9 months? How has the exports panned out for us in the 9-month time frame? Has it grown, declined, and what percentage of revenues for the standalone entity are coming from exports?
Standalone on the TI basis, because the domestic demand was pretty strong, there is a decline of about 1% in overall pile. But overall, maybe let's say in terms of absolute numbers, maybe we are able to maintain it.
Got it, sir. Thank you so much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Hardik Doshi from White Whale Partners. Please go ahead.
Yeah, thanks for taking the question. My first question was on the three-wheeler electric vehicle. You mentioned you want to launch the product in April. So can you give an update in terms of the number of distributors and the geographies and
Hardik, sorry to interrupt you, but your voice is not coming very clear.
Can you hear me now?
Yes, sir.
Okay. Yeah, so, I just wanted to ask a question on the three-wheeler electric vehicle that you're launching in April. Can you give an update in terms of, who are the, how many distributors have you gotten on board or dealers you've gotten on board? What is the geographic distribution and what is the profile of, these guys? Because obviously we're launching on the OEM side for the first time. So how are you convincing them to kind of come on board?
So we have Paul or Sushant on. Can they answer that?
Yeah, I'll answer that question. This is Paul here. I think in the first phase, we are looking at the southern states for a launch for the commercial production and the supply, which, as Mr. Valant said, commences from March onwards, and then steadily we ramp up. The distributor around these areas have been selected, and currently we have about 42 distributors with us along with the service center, and by year end we plan to be at about 75. That's the plan. We are going systematically, and then we go, state by state. We've had very good interactions with the distributors. We've sent some products to a few of them, and it has been tested, and they're quite positive about it. We are getting into the final stages because the battery homologation, one part on the change on standard, had to be done, which we have obtained, and the last part is what we are obtaining. February we hope to get that, and so in March we should be full scale supplying the plans that we have made. While selecting the dealers also, we have been very careful in working out the ROIs carefully, so that that there is based on the volumes that we estimated, so that we could sufficiently keep them motivated.
Okay.
Does that answer your question?
Yeah, just a follow-up. I mean, what is the profile of these distributors? I mean, are they existing OEM, dealers already, or are they like part of the Murugappa group?
And most of them are, some of them are existing, some of them are new. Some of them have experience not in three-wheeler, but in the OEM business of vehicles, etc. So it's a good mix of people, predominantly little younger in nature and wanting to make a difference is the kind of people in terms of the profile that we have taken.
Okay, got it. Just one follow-up question on the other parts of the business, like you mentioned the optical lens and then possibly looking at medical equipment. Can you just give maybe a more broader overview as to how are we looking beyond EVs in terms of the new areas that we are looking to diversify into?
Well, sir, you want to take it, this question, or shall I go ahead?
Okay, sure, go ahead.
Regarding MedTech, maybe we are still exploring, and at appropriate time we'll announce it to the market, what are the areas we are going to enter it. And in optics, we have acquired a facility in Noida, which we are happy to announce that maybe that is touching break-even levels now. And we are increasing our share of business with the low megapixel volumes as on now. And at appropriate time, we will even expand the business to do camera modules for even the higher pixels.
Okay. All right. Thanks so much.
Thank you.
Thank you.
Ladies and gentlemen, you must press star and one to ask a question. The next question is from the line of Vimal Govind from Alchemy Capital. Please go ahead.
Okay. So, sir, my question is on industrial chains exports. If you could just highlight how have they done, and even highlight what is the domestic picture looking like over there. And I'm sorry to make you repeat this, but I missed out on your electric three-wheeler costs that you probably highlighted earlier in the call. If you could just probably mention that again. Thanks.
First, I'll take on industrial chain. Industrial chain exports, particularly in Europe, there is a bit slowdown because of the issues related to Europe. But otherwise, all other geographies are doing pretty well. And we also enhanced in that particular business also to do more OEM acquisitions on the new product development side. And forecast seems to be good going forward even for industrial chains. And the domestic business is also doing pretty well in industrial chains. Paul, sir, you can take it.
Sorry, I didn't get your question.
Sir, Paul, sir, you mentioned
question on EV.
Yeah, Paul, sir, you mentioned something on electric three-wheeler cost that came about in this quarter earlier in the call. If you can just highlight that once again, if it's okay.
So the figure I think Mayapan shared there, asked him to
I think it is not about the cost. It's a profit. It's a loss which the three-wheeler, there is total TIC NPL made during the quarter is 39 crores. You're referring to that?
Yeah. Okay. Yeah, got it, sir.
Okay.
Thanks a lot.
Okay. Thank you. Bye.
Yeah, and sir, within industrial chains, if you can just tell us how much is autos at this point in time?
Industrial chain is nothing to do with auto.
Okay, fair enough, sir. Thank you so much and all the best.
Thank you. Next question is from the line of Anupam Gupta from IIFL Securities. Please go ahead.
Morning, sir. The first question is relating to the three-wheeler launch delays which have happened. You have mentioned two standard changes which have happened. Can you just highlight what were those changes and what is that is reflecting in the delayed launch versus the September marketing launch which happened?
I'll take that question. I think in the interim, if you know that there have been two standards on battery that has got announced by the government, MHI, which we had to comply with, and therefore that entailed doing revising the specifications on the batteries and having adhering to those safety standards, which are the new ones that they're regulated, and that's what has been one of the reasons where we had to raise on. For example, there was a CAN-enabled charger and many other stuff that they mandated, which resulted in the delays of the launch. The other thing also was that we took that opportunity to do a lot more reliability kind of tests further to just assure ourselves. So these are the two reasons. The other one was also the ramping up of the supplier volume, and aligning them with the quality and delivery standards, and having everything up to date for them to be capable to ready just in time supply. So this combination of factors is actually, resulted in this delay from the launch. And now, going forward, as we already mentioned, in March we should see the first, vehicles rolling out for sales.
Sure. That's helpful. So the second question is slightly, let's say, if you look at the medium term for EVs, I think as of now, it's more of sort of assembly with some structural doing yourself battery and cells being, I think even motors being outsourced and acquired from third party. If you can highlight what will be the path to in sourcing for yourself for both three-wheelers as well as trucks. So from what are we at right now, and how will we change that in terms of sourcing? How much will come in-house? If you can highlight that.
I think we have to break this question down into two parts. The first part would be in terms of three-wheelers, we are sufficiently indigenized, excepting for cells which we have to import, not only us, everybody else. Battery is assembled here. The motor and controller is local. There is nothing to import there. That's the first part on the three-wheeler piece. On the heavy commercial vehicles, there is a huge opportunity of indigenization, and we are working around those plans, to materialize us in the first half of next year in stages with that cost reduction program related with, batteries, related with the motor controller, related with cabins, and a few other items. We are seized of that. There is a internal plan that we are monitoring. And the way we look at it in the first half of next year, there will be substantial reduction in cost, and also in terms of the lead time for supplies, because it will get indigenized. That's the way we are working around this.
Okay. And just maybe more from a slightly longer term in the same aspect, what part of, let's say, the three-wheeler or trucks will you want to retain with yourself and not do even on an outsourcing basis to ensure that you are competitive versus in the longer term? So what portion of the supply chain will you want to have with yourself?
Yeah, I think the first part would be, gradually we would like to see that the software and associated hardware we are largely controlling. because the vehicle, is going to get more and more, software driven. And so those differential advantages we would want to retain with ourselves. And actually we are arming ourselves to be able to get to that stage, to be able to do that. That's the phase that we would do. The second is with the volumes ramp up, we should be able to get far a lot more suppliers whom we can synergize with each other and thereby look at stable supply chain and stable costs. That's the second thing. Third thing is in terms of how we look at, which components in the supply chain would be outsourced, which components do we manufacture ourselves or assemble ourselves, is another view that we have taken, and we are working around to that to get to a much more leaner and cost-effective supply chain.
Okay, understand. This is helpful, sir. And just one last question from my side on the optic lens business. What is the update on that? Have we got the full sort of validation, or what's the timeline for that?
In optical lens, our samples has been given and it is approved, and we have received the first set of orders, and now to deliver that to entire commercial production, and we are in the stage. We hope to deliver that in this quarter.
Okay, understand. That's all from my side, sir. Thank you.
Thank you. Next question is from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir, about the optical lens, from whom we have received the orders?
Generally, we don't share the name of customers, but it's basically in China and Korea.
And from which industry side?
It's for the optical lens, maybe for automobile industry. If you're talking about the AA optics.
Okay. And sir, the second question is regarding the investments in electronics and medical devices. Is it possible to share what kind of at least investment we are looking for a medium-term perspective over next 2-3 years in terms of growing this business organically, inorganically? Any timeline and budget on this?
No, I think it's too early in some of the new businesses to give any forward-looking statements. So we will refrain from that. It's kind of till we get more comfort with the business.
But sir, if I look at for next 3 years, do you think this business can materially add more than 10% of our sales?
Yes.
Okay. And if the investments required for these businesses, this will come internally, or is it that we need to raise the cash for these businesses?
So we said that we will continue to take. So yes, I mean, in a situation where we do believe that it does not make sense. See, because basically what we've kind of openly discussed with you is that we don't want to go more than 2 times free cash flow as debt, right? So we believe that a business is better funded by bringing in external investments. Yes, we will pursue that.
Okay. And so last question is from Tube investment perspective, our company, we will keep developing businesses in our subsidiary and Tube investment will act as a holding company, or is it that we can develop the business inside the company as well?
So in some, it's going to be dependent on the nature of the business. In some cases, they will develop in Tube. But like in specific areas, like in clean mobility, because it makes sense to kind of keep that as a separate standalone entity. Or, kind of if we can, like when we go down the path of, perhaps a totally different business like MedTech or something like that, then we will basically push it out as a separate entity. As a subsidiary, basically.
And the electronics and medical devices will be the same thing whenever we will develop those businesses?
Right now, like electronics, is the Motion acquisition is different, but then otherwise, kind of electronics, we've not kind of created a standalone subsidiary for that. So, like I said, it's going to depend on the nature of each business. If it makes sense for that business to stand alone as a separate subsidiary, then we will do that.
Okay, sure. Thank you so much, sir.
Thank you.
Thank you. A reminder to all the participants, you may press star and one to ask the question. The next follow-up question is from the line of Abhishek Ghosh from the DSP Mutual Fund. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity again. Sir, few questions. Just, we've seen a very sharp moderation in the overall shipping rates and supply chains have gotten normalized. Are you seeing any impact of that on the imports for certain of your segments? Because import substitution was also a big theme. Any sense on that?
No. When you think of import,
yes, please.
Okay, yeah, I'm just going to answer that first, and then you can jump in. To your question on import substitution, when we talked about some of these new businesses, right? That's what we talked about import substitution from a reference to, and I think that thesis definitely continues to hold, right? We don't see any change in that thesis because there are two things driving it, right? One is the pricing. The second is clearly India wants to make a lot of this ourselves within the country. So I think that will continue, right? I think to your second question, I don't know if you were also talking about just imports in general and what's happening on that front. I don't think, besides of, steel, which we import a small quantity of, I don't think we do kind of anything, much more significant on that front.
Okay. No, so my question was more around, in generally across when we are seeing where people had benefited because of lower imports, because of higher shipping cost, I think those benefits are going away. So I was more trying to understand, are you also kind of seeing those impacts or benefits going away? That was my question, but I think you've made it clear. So that's clear. Yeah.
Yeah.
And the second thing is that if, in the last year's annual report, you had articulated that broadly in small bits and pieces, you'll be putting up 4 new plants, which either had just got commissioned towards the year end or through the year it will get commissioned in terms of, the 4 new plants which were there in terms of the Aurangabad auto chain unit, industrial chain, new tube mill at Chennai. Just in terms of have they been able to ramp up or what is the status or should we assume growth coming from those in the subsequent years? Just your status there.
Mukesh, these are plants for the existing business only.
Yeah, existing business. Whatever investment we have done in the Rajpura on the tube mill side, we are able to ramp up and it is getting fully stabilized. In terms of, we took some initiative for putting a capacity on the exports capability development side. That is ramping up. New programs are getting awarded on the export business, and it's a question of time we will start increasing the capacity utilization. All other capex are work in progress, like on industrial chains and on the CRS side, which will take about industrial chain. We expect it to be over by next quarter, and CRS will take about another few quarters to get it commissioned.
Okay. And sir, the other thing is, whatever margins that you've reported in the current quarter, that does not include any one-off or anything. This is X of that, right? Is that a fair assumption?
That's right.
Okay. So margins from here on, these are base margins and margins should improve from here on given the operating leverage and overall, benefits of the Project Leap and other things. Is that the way one should assume?
Yeah, that's what maybe generally we don't give forecast, but that's what we attempt. We are driving it internally.
Okay. Great, sir. Thank you so much and wish you all the best. Thank you so much.
Thank you.
Thank you.
Ladies and gentlemen, you may press star and one to ask a question. Next question is from the line of Rohit Ohri from Progressive Shares. Please go ahead.
Hi, team. I've got 3 or 4 more questions related to Shanti Gear. If you allow me, then I should ask.
No, I think we've said this, right, which is we sort of do kind of, maybe we can just take one question, from you, but kind of, our preference is to do the subsidiaries kind of in independent meetings, even those are independent listed companies on their own. We can take one question from you, sir, just for the call.
Okay. Shanti is exploring some opportunities which are related to some buying of plant in Sanand, and there's an agreement that Shanti has entered into. So if you can just take us through that, what sort of area is there available in that plot? What is the amount that you intend to spend? And which is the area where you see that there will be stronger demand coming from the GGB business?
Mukesh.
So like you said that we already signed the agreement in the West for expansion. Today, Shanti is more of a south-based manufacturing company. We want to actually expand our operations to get the operating leverage as well as getting into new sectors like renewable energy. That's the intent. We want to do it in West, and hopefully that plant should be up running in next 1 or 2 quarters.
And the spends, if you can share, and which segment do you intend to focus on?
I mentioned that maybe it will be renewable energy and the gear business, whatever we do it in Shanti here, that will be done in the West.
But you can just help me with the cash levels or bank balances that Shanti has as of 9 months.
Again, we can't go through all of this level of detail, so I appreciate it. We are happy to take your question offline and answer it offline. So you can contact us kind of, in investor relations. We'll get back to you with a response.
Okay, that's cool. Thank you, sir. Thanks a lot.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Next question is from the line of Vipul Kumar Shah from Sumangal Investments. Please go ahead.
Hi, sir. Thanks for the opportunity. My question is, what is our cumulative investment till date for electric three-wheeler, the truck and tractor, and what will be the capex for next financial year in all these 3 products?
So we are not discussing a capex number yet for the next financial year, because that plan is evolving. We're in the middle of our business planning cycle. We will have a number for you on that by March when we take our business planning cycle to the board. In the 3 businesses to date, the total expenditure that has come off of internal accruals has been to the extent of about 500 crores.
Okay. Thank you, sir.
But we'll share that with you. We'll share a capex estimate with you after we finish our March board. So it will be in the next earnings call.
Thank you, sir.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I now hand the conference over to the management for closing comments.
Thank you.
So would you like to give any closing comments?
Oh, nothing from our side. I think kind of, so I mean, we continue to be, bullish on the overall outlook. I think, like we've told you in the past, kind of, some of the new businesses will take time to kind of set root and start growing. But we continue to be kind of extremely bullish about both our new businesses and the existing businesses. The 2 segments in which we are seeing a certain level of sluggishness, obviously, is the bicycle business and currently on railways and TI, though we do see that changing with some of the new announcements in the budget as well. And overall, we are quite excited about the outlook for the next financial year, which seems very promising at this stage. And that's it from my side. But I'm happy to turn it back on the phone to you and take the questions from there.
Sure. Thanks, Valian. Thanks for the time, and we can end the call here. Thank you.
Thank you very much.
Thank you.
Thank you, everyone. Bye.
Thank you.
Thank you, everyone. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.
Thank you.